IVM.
Hi everybody, just wanted to ask everyone for a quick favor. We're running a brand survey right now and would really appreciate it if you could let us know what you think about the advertising on IVM. Go to ivmpodcast.com/survey and do let us know. As part of this, we'll be selecting 10 random participants and sending them some IVM swag, so do fill out those surveys.
Welcome to All Things Policy, a daily podcast supported by Pragati, a flagship media initiative of the Saksham Institution. We are a bunch of policy nerds based in Bengaluru, and we like to bring fresh perspectives to Indian affairs and an Indian perspective to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hello and welcome to All Things Policy. I'm Mihir Mahajan, your host for today's episode. The BSE Sensex in the past year has gained 44%. In this same time, over 14 million new demat accounts were opened. Many of these accounts belong to first-time investors that are likely attracted by the bull run. One important factor driving investors to the market is the ease of use that stock trading apps have provided. You might have heard of apps such as Zero Dark Tide, Grow, Angel One, Upstocks, Paytm Money, etc. These shiny new apps, unlike some of the desktop-based platforms, make stock trading a one-tap affair. This appeals to the millennial generation much more than the stodgy user interfaces. However, there is a dark side to the use of these apps. Many users that are fresh traders, they're not experienced, can make trades quickly without fully understanding the risks involved with stock trading and could unfortunately end up losing money. The design of the apps, their user interfaces and interaction patterns plays a big part in the user experience of actually performing trades in the market. To talk about these topics, I'm glad to welcome Anirudh Tagat and Saksham Singh. Anirudh is a research author at the Department of Economics of the Monk Prayogshala in Mumbai. He has conducted research in economics and has been published widely. He's also currently deputy editor at South Asia Research. Welcome, Anirudh.
Hi, thanks for having me.
Saksham Singh is a researcher with the Center for Social and Behaviour Change at Ashoka University. His work is in applying behavioral science to public policy challenges, such as what we are going to talk about, app design. His projects range from those on privacy, health, and sustainability in developing country contexts. He's also a part of India's Behavioural Insights Unit at the NITI Aayog. Welcome, Saksham.
Thanks for having me.
Guys, let's just start today with maybe the simplest question. How did you become interested in stock trading software as an area of attention?
So perhaps I can, give it a shot. I think starting with the fact that, as you rightly mentioned, in the last year alone, there have been, people who have, been using these apps and especially in investments in general in the stock market seems to be the only avenue. And all around me, I could see that these apps are all the rage. I mean, in order to invest. In fact, I think even this particular article comes as a second part of a larger series on identifying harmful sludge, nudge, and dark patterns in online services. And this is part two, which is where we look at stock market investment apps. And the idea was that because these are all the rage, then what is going on and what is going on under the hood, because you were also cognizant that Robinhood recently in the US was facing some amount of public scrutiny as well. So I think it was only natural that we were curious to see on what was going on in the Indian context.
Awesome. That's a mouthful of jargon there, sludge, nudge, and dark patterns and so on. So I'm sure be assisting us and our listeners in uncovering what those mean. Maybe we can start with, for example, just an initial idea of what do these smartphone apps do? What are the main features and how are they distinct from stock trading platforms of earlier times, whether desktop-based or even trading machines themselves?
Yeah, I think I can take that. I think one of the main features of these apps is, of course, the convenience, right? So the fact that we can have the stock market at the tip of our fingers, so to speak. So, they have everything from, daily price sort of information on various aspects of, whichever index that you might be interested in, different companies, valuations of these companies, information about everything from when they had their meetings to sort of what kind of trends they're observing from their own analysis. They have sort of detailed charts, even ones that perhaps even lay people could possibly understand just from just from a single glance. And I think more than anything, the fact is that they've made trading just sort of as easy as, between 3 and 4 steps to buy a particular stock. And that's really a big sort of transformation in terms of, how we interact or how individuals engage with the stock market. It didn't used to be this easy, but certainly now it is far more easier. So I think that those are some of the main features that we've been seeing.
That's very interesting, Anand. If I may ask a follow-up question, how do these apps compare with, for example, a more established trading platforms from either from a major bank or from a Sharekhan or something like that? Do these companies also offer apps, and is there a kind of a distinction in the user interface that you have perceived?
I think one of the main things is that, so to answer your second question first, which is that, yes, they do also have, so Sharekhan also has an app, and, ICICI Direct will have an app and things like that. But I think the main advantage of, some of these apps that you mentioned earlier is just the fact that they're very do-it-yourself kind of model, right? So they give you all the information. You have the freedom to decide what you want and you don't want to buy. In terms of advisory, there's nothing happening over your shoulder. You just kind of see some information. You want to buy it, go ahead and, you can just, as we've written in an article, you can just swipe left or right and you can just buy it in a couple of steps. I think the other thing is also the user interface itself in terms of, the different tabs that it's organized into. Like, for example, in one of the apps that we were looking at, there was a news section that sort of, constantly kept updating. And so I think the objective of, having these, at least in these types of apps that we've reviewed, is sort of having it all in one place. So you never really have to navigate away from this. And at the same time, it's not overwhelmingly sort of complex in a way that the stock market was perceived before, right? So prior to, I think, these apps perhaps coming out in this sort of big explosion that we've seen, as you were talking about in investment apps, perhaps there was still a level of, perhaps people were still a little bit intimidated about trading in the stock market, but perhaps these apps have made it far more attractive, far more easier.
Just to quickly add, if I may, to Anirudh's point, which is also that I think, from a methodological point of view, I think we have tried to look at the mobile application, of many of these third-party apps, many of which are, which are offered on the mobile. Because as you know, Zerodha also has a desktop version, but, we evaluate it for all the instances which we do for the mobile app version itself. And then, just that.
Understood.
Yeah.
Yeah, no, that's a great clarification. And in fact, as a mobile first country, my understanding is in India, the penetration of smartphones is much higher than that of laptops, desktops, and computers in general. So in terms of having mobile apps be available that can be used anywhere, anytime, it sounds like users are really benefited by having access to the stock market, no matter where they are. So
That's
in
true.
that sense, definitely the apps provide that experience. So, I mean, speaking of which, I mean, it sounds like these apps have made it as easy to invest any amount of money in any stock or other instrument as, for example, placing an order for food from a restaurant or buying something worth 100 rupees from an e-commerce website. But as opposed to kind of instant gratification that food gives you when you order it and it gets delivered in an hour or less, or making a purchase off of Amazon and having an object available for your use, investments are a little bit different. If I may, investments are things where you are, as a user, you are putting in money. For example, if a person invests in a particular stock, they buy it at a particular price, expecting or hoping that the price is likely to go up at a future date where they may sell and therefore make money, or in other ways. Essentially, they're investing in an asset. They're not buying it for consumption like a restaurant and otherwise. But the ease of use is very similar. Does that mean, and in terms of the amount of money that can be invested through these platforms, it's not really restricted in any way. Does that, it almost sounds like users are also skirting with danger here, because they could end up spending a lot of money investing in stocks, not fully understanding the risks associated with it.
Yeah, I agree. And I think that's one of the main reasons that also motivated us to start looking through these apps, in the sense that the context in which investments are made are perhaps very different from the context in which you order your dinner or you purchase, I don't know, a lamp off Amazon or whatever, right? So I think that whole, and the fact that, these apps exist side by side in your phone, literally side by side in your phone, is perhaps something that's most telling about just the ease and the convenience with which investment is now available to people. So yeah, in a way, I think I would agree that there's a high level of risk again associated with just having such easy access to markets. As an economist, it's often the case that we look at investments as much as we look at, say, risky gambles, right? Which is really a reference to our earlier article on the gambling platforms. So yeah, so that's something that I do agree.
And I think
And yeah, go ahead, Saksham. Yeah.
Sorry, just one point I think which you picked on in your question itself, which was that a large majority of the investors that at least we are also looking at or trying to understand, I think in some sense of form, is that the millennial investor, right? I mean, which has recently opened the demat accounts, and the retail investors who have come in, and again, I think as Anirudh pointed out, the risk, aversion, or rather I should frame it as the risk-taking capacity would differ from the type of investment strategies these investors end up deploying, which would be very different from a seasoned investor versus those of a retail and a younger, and experiences. Again, one of the things that could be an important factor into the kind of risk appetite investors would have.
It's very interesting you should say that, because the experience of using an e-commerce or a restaurant delivery application is a pretty straightforward one, and there is that approach, and it's not a long-term kind of game that the users are engaged in, and therefore the ease of use actually matters. So to some extent, from what both of you are saying, it seems like the ease of use as well as the interface design, the interaction design that these apps have done could negatively impact the users. And this brings me back, Saksham, to your earlier reference to sludges, nudges, dark patterns. And these are kind of terms that I have heard before. But would you mind explaining maybe with an example, one or two of what these mean in interaction design and how they might be incorporated in an app?
Perhaps I can try to address, and Anil, please feel free to add. One of the things I think, I'll start with nudge. Right. I think nudge is essentially defined by one of the first people to start using the nudge, which is Cass Sunstein and Taylor and others, is more like a GPS device, right, which guides you to make a decision. I think and reach a destination in some manner. Because the conversation around sludge is also evolving. Dilip Soman and of course his co-authors have come up with this nice framework which makes a distinction between harmful nudges and sludge versus the other kind. I think which might be more helpful. And again, I think there's a slight difference that you don't want your GPS indicator to be taking you through a longer route by investing more fuel, but it should ideally point you to a place in the quickest manner possible, right? I mean, but I think that's the analogy which is used. One example which I personally I think which and I think I'll use your own example which you cited earlier, which is of how many users are there in the app. Some apps make a mention of that, and so when those apps make a mention of that, that's like one of the essentially it's making it social. When you're making it social, it is also inducing some sort of an urgency. Now, if you look at Soman's work or Narayanan's work, I think with dark patterns, there's a slight convergence between the two, where you see that by making it social, and it's also somewhere covered under the dark patterns framework, and also I think within sludge simply put, it's also around the fear of missing out, right? FOMO. As I think even in investor parlance, FOMO has been the word which has commonly been used. So with dark patterns, with harmful nudge and sludges, I think there's a side of convergence. And one ready example is the social proof bit. Of course, the way that those social proofs are delivered is slightly different, I think, whether they are static or dynamic. But again, I think even providing, at a hyper or at a meta level that, okay, these many people have invested and earned profits in the stock market in the last 1 year alone, that induces urgency, that increases social proof. And I think that's nudging you in a certain direction with an urgency to invest. I think that's again a broad example that I personally like to use.
Yeah. And I think just to sort of, illustrate a couple of other things. So one thing is that as Saksham said, the idea of a nudge is something that's sort of well understood, and now everybody and their mother is talking about nudge theory, right? So in a way, I don't think nudge is something that's terribly novel or sort of not understood. I think basically it's basically a feature of your decision making environment that helps you facilitate a specific type of decision, which is good for you. So the inherent sort of assumption there is that this decision is actually good for you. You want to move people into a decision that's good for them. Now, this whole idea of dark pattern is that you're actually moving them into a welfare sort of reducing option. So in a sense, you're moving them away from something that's good for them, but you're facilitating decision making in a sense that it into a decision that's actually bad for them. Right. So, you can think of having somebody subscribe into a particular service or a particular plan which they don't want to get into, but all the features of your app perhaps seem to sort of facilitate that particular. You design it in such a way, you use defaults and things like that to perhaps make it so that the consumers will actively just choose this potentially welfare reducing option. And when you talk about sludge, it's actually about making it actively difficult to do something that to make a particular decision, to make a particular choice, right? So for example, I'll give one example maybe outside the context of apps, and then we can get into apps. But when we talk about sludge, you think about, so I serve as an editor for a journal, and basically in this journal, in order to invite a reviewer to come and participate in the review process, we actually have to send them an email. This reviewer has to sign up, then they have to sort of accept the review, and they have to do all of these other things. So it's basically creating a lot of friction points in order for them to do something that they wanted. But then because of these many friction points, they actually turn out to decline the review. And there's actually something that just happened last week. So that's why this example sort of immediately came to mind. And when we talk about these sort of investment apps, really what we'd say in terms of a dark pattern, what we're talking about is, in addition to the social proof part that Saksham mentioned, we also have things like when you're signing up, and there's a sort of meant to be a detailed disclosure, or there's meant to be a detailed disclaimer that sort of highlights, potentially risks of investing in the stock market and sort of what kind of information you're handing over to the company. And in some of the cases that we saw, this information is literally put in a black box at the bottom of the screen, and you can in a way that it's basically illegible, right? So, and you also have to click on more in order to read the whole thing. So you have multiple levels of this change in design in a way that's perhaps actively trying to impede you from actually reading this and making an informed decision before you sort of jump.
That's a very interesting way, Anirudh, that you put it. It sounds like interaction designers that actually put together these apps and various flows by which users can perform actions such as making an investment or liquidating an investment by selling some stocks, or evaluating a particular investment before they actually make a purchase, transferring cash between these apps or wallets that they might offer, and the bank accounts and so on. So there seems like there's a lot of interaction points where the design decisions that the app makers take actually can impact the user experience, but also the way users behave on their platform and how successful or unsuccessful they may be at the trades, independent of how the markets behave. So maybe at this point, we'll take a quick break. And on the other side, we'll come back and talk about what you found, what you've written about in your Bloomberg Quint article. So let's just take a quick break.
Hey, it's been another great week on the IVM Podcast Network. On Pulyabazi, Pranav and Saurabh talked to author Ghazala Wahab. They bust many myths surrounding Indian Islam. On Postcards from Nowhere with Utsav, discover the lifestyle of the lesser-known Gujar Bakarwals. On Speakeasy with Dheeraj, best-selling author Mainak Dar divulges how he gets so much done. On The Habit Coach, Ashton is joined by Daniel Lobo. He shares his journey of being a mental health advocate. And on Storytellers and Storysellers, Vinny talks to Hyderabad-based musician PK about her new song, You Don't Have To. Do follow us on social media. We are IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you enjoyed this show or any of our shows for that matter, please do tell a friend. Word of mouth is the best way to spread the word about a podcast. And finally, we'd like to thank our sponsors on the network this week: Ciet Cred, Bank of Baroda, Quarter, CoinSwitch, Kuber, and Intuit India. We really do appreciate the support. You are what makes this possible.
Welcome back. And you want to maybe give us one example of what you found in any of these apps that you evaluated that potentially, I mean, you already spoke about the fact that certain warning text is in black and requires multiple clicks to access and read fully. But maybe a simpler example of social proof in any of these apps?
I think one of the apps right on its home screen displays that, okay, in the last year, say that, 10 lakh people have invested in the stock markets, right? And, so I think that's some kind of a social proof which is provided to any investor. And to add to that point, I think, in addition to that, there's always an uptick marker with green growth indicators, I think with vivid colors, I think, which is placed right next to it. And and which introduces that sort of urgency that okay, I mean, essentially, if the message could be taken from that particular social proofing of okay, so many investors have invested and earned so much money, in the last year alone, and you're really missing out by not doing it. I think, and essentially, like you were mentioning, even with the interaction design, I think, the way that those are strategically placed right next to it, saying that, okay, this is going uptake. I mean, and strangely enough, at least to me, I think I could never see that, okay, the markets have been down in the last year. I mean, there's only one way that, and the market has fluctuated, right? It's not like it's a steady way to the top. And, it's strange that you're speaking on today when the markets have hit record high again. But I think there is fluctuation, right? But the way that it's framed, the language of it is always that it's always on an uptick. I think that's definitely one example that I think I cite. Anirudh, do you want to add any other examples?
Well, not exactly, I think, of social proof, but I mean, I will say, so, I mean, for example, you also read, similar to what Saksham was saying, you also read things about, say how you can choose from more than 10,000 plus curated funds, for example, right? So it's not clear sort of who is curating these funds, what is the expertise of individuals in curating these funds, but there is this sort of attempt to say that, okay, we kind of, expect you to take this up because it's curated. So, I mean, don't worry about whether or not it'll be profitable to you. Like we got you, like we can handle this. So just close your eyes and press the magic button. You'll be in good hands. So it's things like that. I think that also come up in some of these sections.
Sorry, yeah, no, sorry, I have this bad habit of always starting to speak, I think, when you're trying to. But I think the one additional thing that we wanted to mention was, I think, which you've highlighted in the article too, which is that it's not just about the presence of something which is nudging you into a direction, right? It's also the absence of it. And in the parlance of, I think, designers, I think it's something called a frictionless environment. I think so. It's not just the presence which we should be looking at, or anybody from the from anywhere else. I think in terms of the stakeholders we should be looking at, but also the absence of items which can be used for investor protection. Right? So I think that's a small caveat that I'd add.
So, to summarize what both of you said, what I understand is interaction design by making certain things more available, simpler to do, or playing on your cognitive biases with respect to either the use of green color or upward pointing arrows, or even things as simple as saying X number of people have invested, are nudging you in a particular direction, and that may or may not necessarily be good for you. But also by excluding things like speed breakers, which will eventually kind of say, look, you have invested a lot of money in the last whatever number of trades that you have done. Do you want to slow down? Or maybe offering you features such as restricting your number of trades or amount traded or things like that within a day kind of can protect investors. In fact, my understanding is brokerages that do trades on behalf of customers are required to kind of have a customer profile and information about know your customer and kind of trade based on that rather than kind of just entering into any number of trades. So maybe the speed breakers and the absence of them is also something that interaction designers need to think about in the context of these apps. They're very different by their very nature than traditional e-commerce. So just reserving that by way of comment. So maybe let me ask you this then, in terms of what are the remedies for this, right? I mean, if all the different apps are essentially drawing from a designer pool that is emphasizing ease of use, that is emphasizing ease of transaction, and kind of making these things, and which has value on its own, as we spoke about earlier. But what are some of the solutions that one can come up with in order to ensure that the design of these apps and the pattern in which they lay out things and make trading feasible does not kind of cause the consumers to make decisions that are not necessarily in their interest? Is there evidence that you have found that investors have been negatively impacted? And two, then what kinds of solutions may you suggest?
So to answer your first, question, which is that where has there been evidence? I think I mean, because again, drawing right from the debate which Robin Hood, I think, faced, right down to the Indian context. I think as recently as February, whenever there are glitches, even within an app, there is little to no guidance on what is the role of the regulators, right? If due to a glitch in the app, investors are facing losses, what is the kind of guidance from the regulators on say investor protection, right? I think that's the larger, I think, conversation that we're also moving towards, that especially with apps, what is the kind of environment, number one, that Indian investors especially are investing in, the regulatory climate, and what are the recourse options which they have should they be, let's say, nudged in a negative manner, or out of a system outage as well. I think the guidance, is also in the sense that regulators and in fact, Gillian Tett at Financial Times, I think, has written some interesting pieces on how can regulators would need to take stock of these new advances, even in interaction design, or understanding human behavior into developing regulations, right? I think, and that's something that I personally find to be that there's not much understanding which might go into the regulatory policy and decision making there. That what can be the impact of say UI or UX, I think, on on how investors behave on these platforms. I'm not sure if I if I delivered that with much clarity, but essentially, I think the solutions must be coming from more of a regulatory standpoint, and also from customer protection point of view, customer and in fact investor protection point of view.
And if I could just add there, I think the also the main reason that we think that it's particularly important in a country like India is that because there could be sort of very vastly different country contexts. And to answer your first question directly is that, and we're very sort of upfront about it, is that there is no evidence to kind of show that, oh, if there are a lot of apps in the market that perhaps use these sludges, then there's some decline in investor welfare or something like that. We don't know that for sure, but I think the idea still is that we want to move towards a scenario where investors take a choice that's perhaps informed, that's have these speed bumps, that have this friction, and that just tell us a lot about what kind of decisions we're taking. These are risky decisions. These are not decisions that are meant to be taken lightly in that sense. This is perhaps more serious sort of asset investment sort of decision, and that's something that we need to have full information about before we kind of take that plunge.
And it's to also add in Massachusetts, in the states, the regulators took notice of Robinhood, and I think they also faced some fines there because of some of these irregularities, I think, that the app faced there. But I mean, I think as you already pointed out, in India, I'm not really sure what kind of data we also have in order to support any hypotheses. I think there and that's the need of the hour.
Exactly.
Let me ask you another question with respect to regulation. What we talked about, for example, some of these mechanisms may be within conventional regulators' purview. For example, examining transactions that take place via a particular platform for patterns or for errors, or for evaluating consumer behavior on a particular platform. That seems like something a regulator can do by examining trades that happen. But really, does our regulatory mechanism have a way of auditing the user interaction experience to detect dark patterns, or to detect nudges or other kinds of design choices that leverage human behavior in a particular way? Is there regulatory capacity for something like that, especially on the financial market?
Sorry, go ahead.
Go ahead, please. Okay. So I just take a first stab at this. I think to say that the reason why I think we were also inclined to assess these apps was that already I think India has a vast, I think number of entities engaged from a regulatory standpoint in it who for investments and in the stock market. So I think in terms of number of entities which can take a look, sure, I think the markets have evolved enough where such things can have frameworks to kick in. And I think if any place where the regulator can have a point of view, I think it's this. And again, I think the methodologies I think employed to understand consumer behavior would definitely have to evolve from a regulatory standpoint.
Yeah, and I was just going to add on the capacity point of it. Like, I do agree that there are sort of, severe concerns that whether, it's the regulators, whether the regulator has a capacity to sort of sit and go through all these apps and understand the extent to which perhaps they have the presence of these dark patterns or these sludges, what they might potentially do to investor welfare, and things like that. But I think that that's exactly why we need sort of a clear audit framework for some of these interfaces, right? So in the sense that if we have an audit, then it sort of it boils down to having a checklist for a regulator, right? So even for the regulator, perhaps we need to think about a nudge, right? So we need to think about simplifying the process of the audit so that given the capacity constraints that you so rightly pointed out, that they're still able to delve into these apps and sort of look at what's going on in terms of their design.
Interesting you should say that, because one of the big constraints I can think of is financial market regulators are not exactly computer scientists or behavioral scientists or interaction designers with expertise. And in fact, any kind of attempt to audit or regulate it can be kind of looked at as a regulatory intervention in a domain that's not necessary. So just to play the devil's advocate, one way to think about this is all these apps are essentially competing in the marketplace for users to sign up and perform trades, and they probably earn their money through brokerage that the users pay, or if they enable mutual fund investments, maybe there might be tail commissions and things of that nature. But if you think about kind of a medium term scenario, all of the apps essentially make money by having the users remain engaged and invest their money through the platform. And so anytime kind of the app actually results in an experience where the user loses money, and if that experience sustains, maybe competition will address some of this by kind of having users essentially exit a platform which makes it easy to make bad trades, or which makes it difficult to take money out at a time when profit can be booked and so on. So I think, while the regulatory idea is definitely something worth looking at, I always worry that you invite an Indian regulator to investigate new technologies and new ways of doing things. And what might end up happening is that we might be pushed back into the dark era where a regulator might say that the smartphone app itself is not a good idea and you need to go through 50 pages of text and compliances before you launch any new version. So in addition to an Apple or a Google check on the new versions, you may have 6-month delays between innovation in these products. Any comments?
I'll start, and then maybe Saksham, you can add if in case you do have anything. So I think that point is well taken, right? So the fact that there's this double-edged sword in terms of inviting a regulator to look at an app and perhaps having no meaningful in fact, as you suggest, probably an adverse sort of outcome in that sense, right? Where perhaps these trading apps are regulated in a way that actually does not make them productive, does not, and that therefore they do not even serve their final purpose anymore, which is making investment perhaps more accessible. But I think, as with other sort of regulation, I think we probably need to think about certain aspects of these apps, such as just disclosure, just information. So in a sense, behavioral scientists often talk about how reducing friction is a great way to get people to make decisions, right? So I think in the case of sludge, in the case of dark patterns, what is actually suggested is that adding some frictions is actually going to be helpful in terms of thinking about investor protection, or just in terms of the user, like the speed bumping thing that we were talking about before, right? So I think that we're not really looking at a major overhaul or sort of like having 10,000 different things in place, but really we're just talking about smaller changes that can just make sure that investors aren't caught off guard in terms of what it is exactly that they're signing up for when they swipe left or swipe right.
And I think, as Anirudh pointed out, we are also, I think, suggesting the fact that there are a whole lot of type of, I think, customers of these apps, right? And especially when we look at the high speed trading on such platforms, and especially there are certain type of investors, I think, who might invest more, and when you trade actively, right? I think I think one of the points you also mentioned is that, especially when it comes to retail investors, and Mihir, to your point as well, I think, which you pointed out, that there's, we don't understand that what kind of investor it is who's getting on this app, and some information about that by essentially all the risk of investing, I think, is being transferred, I think, squarely on the investor, or rather on the retail investors, and any of the new investors, I think, which are coming into the market. Ex ante, the communication of the risk has to be done in a proportional manner. And I think regulatory guidance needs to evolve to enable that.
Both actually terrific points. There's a third way that I thought of, and I wanted to get your idea, your thinking around this. So a lot of these apps, and you pointed out, have millennial users, but are also being built by millennials, are being built by innovative 25-year-olds that are actually kind of breaking stereotypes. And India is home to some of the best startups in the world. They are actually enabling access for an entirely new generation, and they're kind of breaking down walls that existed. So it's also probably a fair thing to ask of these innovators to take into account this medium long term view of benefiting their customers, ensuring investor welfare, reducing risk, and so on. But are there things that the companies themselves can do? I mean, I know you have suggested an online app code of conduct, or there could be, in fact, in their product design and in product design methodology, there's always a stakeholder analysis. And while most apps kind of tend to treat the user as the only stakeholder and the ease of use as the only pattern, maybe the speed bumping, maybe the risk analysis, maybe the user profiles or personas can be actually made a part of the product development cycle. Maybe the app developers themselves can have a conversation with you guys and maybe learn a bit more about how interaction design affects investor welfare and incorporate some of these learnings. Is there kind of a case for self-regulation here?
That's a brilliant point. And in fact, I think, and that's a point very, very well taken because as you said, that if it is, designed by the millennials for the millennials or if for any other kind of, investors too, I think, essentially what you say is that even if within through the process of the app development or even, taking a long-term point of view, I think internally with those checks and balances could be something which can earn rewards for such applications themselves. And I think should they reach out to us, I think we I mean and I'm sure that there are better people than me to guide them on this too. But I think the fact is that the conversation needs to get started around the fact that this is one way that it can be affected. Yeah.
Yeah, and I mean, that's a great point, Saksham. Also, and I think I just want to sort of ride on the fact that so we don't believe, and through this article or even in a sort of general viewpoint, I don't think that we believe that companies do this with a sinister intention, right? So I don't think that that's really what that's not really what we're trying to say. I think the fact is that many of these things show up as common sort of UX UI sort of changes that people may induce because, like you said, at the end of the day, if customers make a trade, then this company makes money, and obviously as a company, that's what you want to do, right? So I think that the way to perhaps go through that is, and like I completely agree with what Saksham said, which is that if they want to sort of speak with us, then we'd be sort of happy. And there are many others who are working in the space of behavioral design who precisely address issues like this. And I think if I can go out on a limb, then I would say that you were talking about the product design team and sort of designing Saksham was saying that millennials designing for millennials. It's rare to find, but try to hire an ethical behavioral scientist is my kind of recommendation. I think that it may be very, very tough in India, but I cannot imagine that you wouldn't find one. And I think that they would be more than happy to think about these problems critically. And of course, then rather than simply just hiring them, of course, make them part of your team and sort of listen to them when perhaps they give you some advice on these kinds of things. I think that that's a useful way for, even, I think it would be a very useful way for even a, trading app to signal to the market that, look, we're not here to swindle, swindle you. We're not here to sort
Absolutely.
of, take your money. We're here to help you. We're giving you access to the market. But, at the same time, we really do care. And I don't think that that's necessarily I don't think that comes at the cost of, sort of forfeiting some profit or forfeiting some trade volumes or something like that.
Absolutely, absolutely. And in fact, the conversation we are seeing with Lina Khan in the States, I think it's only right that companies take stock of this ex ante, for long term. I think, and as Anirudh brilliantly pointed that out, I think I'm completely in congruence.
I think great conversation, both Saksham and Anirudh. Thank you very much for explaining your views on how interaction design, behavioral science, and the ease of use that these and the ease of use that they enable through these apps can kind of have negative connotations or negative outcomes for investors. And also to kind of help us understand the regulatory environment and how these mechanisms can be designed in a way that protects the investors while also uh, providing the ease of use. What we can say is in India, we are still at an early stage of financial inclusion where a greater number of investors are entering the markets, either buying stocks or mutual funds or other mechanisms. We are also seeing a great wave of innovation where such apps are coming about. And if any of you watch cricket or sports, you probably have also seen there's a lot of advertising for crypto exchanges where investors can buy Bitcoin and so on. there are also kind of, in addition to these innovations, there's also the overall kind of flur of activity that is making it very difficult as an investor to understand all the different opportunities and risks associated with them. A lot of investors probably don't understand what a cryptocurrency is, for example. And there's a lot of pitfalls that exist. There are influencers on social media that advise people on various stock market trades without an official license or training or without being regulated by the SEBI. There are people that are pushing cryptocurrencies as a mechanism of holding unaccounted money or cryptocurrencies as an investment mechanism that is outside of reach of regulators. There are WhatsApp groups that purportedly send insider information. There's a lot of risk out there for investors, along with this flurry of activity in apps. And I think that the simplest thing for us to kind of say, what would you say to investors? I mean, there are all these things that are available and there are all these risky things that are out there. What would you say to a normal investor as user of this app or any kind of financial offering? From a behavioral science perspective, what would be your advice, if any?
Anirudh, maybe I can go first, and then because Anirudh is really also the expert here. I think in many senses, for and Mihir, I think the point you make about crypto, and because some of the apps that we review also allow for investing into crypto. So I'm not saying anything else here because we haven't analyzed that, but I think the same kind of customers who would, I mean, sorry, I think to summarize that point which I was going to say out is that the risk communication of risk to investors is very, very important, and that is something that should be carefully considered by any of these platforms, themselves, because and especially if there's a stock market app which is also giving a gateway to let's say investing into crypto. It shouldn't be that the same kind of customer who's investing in say penny stocks heavily should also be the one who's investing heavily in crypto. And but the risk should need to be communicated ex ante, and I think, and take breaks. I think at an individual level, I do think that the solution for many of these questions is with institutions rather than just individuals. But at an individual level, investors of all kinds need to take breaks between investments, right? So if the app is not doing it for you, you should incorporate some kind of, breaks between investing, and, seeing that what kind of strategy you're adopting for investing, and see that, what you're actually doing on the app makes sense with that. Because similar to Facebook, which, jumps on you with all kinds of irrelevant notifications, the app shouldn't engage you in very fast trade with their notification should you not want it. So that's something that investors can adopt on their own. And also I think and here I think, so sorry for taking longer on this, but you made a very, very brilliant point on the influences bit. On YouTube you can find some very funny and some very not so funny comedians also now giving investment advice through these apps. So I don't know what the guidance there is on, and they might not just have any certificates for all so, and those are the questions which I think the entire ecosystem would need to address. But as an investor, taking breaks, engaging in cool down periods, knowing your strategy and understanding the risks ex ante, I think that's something which needs to be done.
Yeah, great point. I mean, in fact, that was exactly what I was thinking of as well, which is that one thing is that, of course, if a trading platform, an app or whatever does not have the incentive to clearly sort of introduce speed bumps, introduce frictions, then as behavioral scientists, we tend to we tend to say that, okay, then it's time to talk to the individuals. So let's go back to the drawing board. We maybe we can't convince these guys, but we should certainly at least then look at investors, right? So perhaps the best thing that investors can do to perhaps, sort of protect themselves from potentially these dark patterns, these sludges, is self-regulate, like Saksham. And that's of course easier said than done. But there's a whole market for self-regulation, as many of your listeners will also know. So it's the same that you might use to say regulate your screen time. It's the same that you might use to make sure you're drinking water regularly. So these are the same behaviors that you're applying in it, but you're just applying it in a sort of different context. So one thing is for investors to certainly, find a way to self-regulate. The second thing is, of course, to actively sort of seek out information that's perhaps not not coming from sources such as social media because of the various pitfalls that we kind of mentioned. So I think looking at sort of disclaimers, because unfortunately otherwise it's kind of a one-time investment, right? So you just need to be able to acquaint yourself with the kind of environment that you're entering into, this kind of decision-making process that you're going to be doing over and over again. But the idea is that if in the first instance itself, and that's why even in our article we talk about first-time investors, if in the first instance itself you have access to this information, you're sort of aware of some of the risks that could go into trading with these apps, especially in like more high frequency trading that we were talking about. That's really, you yourself might have a better inclination to self-regulate, to sort of think about the decisions that you're doing, the decisions that you're making. And I think that might make a wonderful difference in terms of just the smaller behaviors that we're really talking about here. So sludge or no sludge, dark pattern or no dark pattern, I think if investors can perhaps access this information as a one-time, in a way, one-time investment of time and effort and cognitive resources, then I think we might have, you might be able to safeguard yourself much better.
Maybe it's time to develop an app, a third-party app, Anirudh, for
it just jumps in the middle. yeah, that's true.
Yeah.
Well, on that note, I think you've both been very kind to give us so much time and also to educate our listeners on some of the cognitive pitfalls that drive these decisions. So thank you both very much, and wish you all the luck in your future research in this area. And we hope to have you again and speaking more about these topics and kind of helping listeners with practical decisions. My own 2 cents, if I may add, is when making investments, be aware of the environment, be watchful, be careful, and treat it as it is your money. So treat it as such. It's hard earned, it's hard to earn, and it's very easy to lose, whether it's a new generation trading app or an old generation app or a crypto exchange. So understand the risks, as Anirudh said, take a breath before you invest, maybe take 10 breaths, and watch out for your own cognitive patterns. There are a lot of materials available to understand how our behavior is driven. Educate yourselves, maybe listen to more podcasts like this, and that should help you in the long run. So thank you again both, and have a good day.
Thanks so much, Mihir. It was lovely.
Thank you for having us. And it was, thanks for thinking through some of those points with us as well. Thanks.
Thank you.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app, ivmpodcast.com, or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVM Podcasts on Twitter, Facebook, and Instagram. And hey, if you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.
Hi, I'm Zarina Poonawala, host of the Empowering Series podcast on the IVM network. I happen to be a peak performance coach and leadership coach by profession, and I'm here to share with you productivity tools, life-altering techniques, and real-life hacks to help you achieve your maximum potential in everything you do, your relationships, professions, careers. So tune in every Monday to unleash your inner power. Be safe, be well, be empowered.
पेश खिदमत है आपकी शान में हमारे अंजुमन से. Hi, I am Sadaf.
And I'm Arshit. खाने का इतिहास, economics, policy, psychology, सब है मेन्यू पे.
Only on the Naan Curry podcast every Wednesday, सिर्फ IVM podcast app या वेबसाइट पर, या फिर जहां से भी आप अपने पॉडकास्ट सुनते हो.